Hans Goetti, Chief Investment Officer at LGT Bank. And let's talk about those Australian GDP figures. And, Hans, we were talking about the red-hot Australian economy growing at the fastest pace in some while. But how are you viewing Australian stocks these days? Are you overweight?
Well, we like Australian stocks. They have pulled back a little bit, and we're watching the near-term trend. We have been in a trading range now between about 4,500 and just under 5,000, and it looks like we're headed up there again to 5,000. If that level is broken, we could have a push to about 5,400 or something like that. We like Australia. The fundamentals are good. The only economy that has not been in a recession. The mining sector looks extremely good, and we like some plays in the energy sector as well.
Is it fair value, though, some are saying, because with all these expectations of economic boom and growth, that really prices have gone out of hand?
Yes, of course. I think the inflation numbers are slightly higher than it is comfortable for the RBA. So that's why we think the RBA is going to move again in April, and we could see the cash rate at 5% by the end of the year. So it's on one hand the result of a strong economy, and on the other hand also rising inflationary pressures. So I think they want to contain that.
Okay, and Hans, let's talk about the one stock that you talked about in Australia the last time you were here, which was Karuna Gas. In fact, you said it was only for your most aggressive investors. Of course, we saw that spike downwards, unfortunately, when it looked like it was inconclusive, those tests on its main gas field off Australia's northwest coast. Some are questioning, do you even have gas at Karuna? But look, they have another potential gas find. So is this stock still worth hanging on to?
Well, absolutely. When we spoke the last time, it was early December, the stock was at about $8. It moved up to $11 after that. And of course, it came back. It's an extremely volatile stock. We're now above 7, it's about 720 or something like that. We still think the story is intact. It's a very interesting exploration play. Not without risk, very volatile, and only for very aggressive investors.
Okay, so a lot of people say that right now Karuna Gas and its drilling with ConocoPhillips in the Poseidon fields is pretty much what its stock price is heavily dependent on right now. Given that, though, given the volatility and the risk, would you advise investors to buy in at $7 and change?
Look, I mean, if you're an investor that can take risk, absolutely, because at the moment they're in the middle of a drilling program. There's one particular well that is being drilled as we speak, so we expect the results of this sometime at the end of March, early April. And we are quite optimistic that the gas is there. They have found gas there before, and it's just a question of establishing the size of the deposit. So we are upbeat about the stock. We have no reservations. They also have properties in Brazil, in Peru, where drilling will start sometime in 2011. So there's a lot of fantasy involved there as well.
Okay, so Hans, given that you're upbeat on Australia, does that translate across the broader markets as well? Because we did have a bit of a correction in the first few months of this year, but do you think we've turned the corner here?
Well, we still think that economies, especially in developed, in the developed world, are still dependent on fiscal and monetary stimulus. That applies to the US, to Europe, and Japan. Now, that is different from stock market performance. Stock prices, to a large extent, are driven by liquidity. And if you look at the monetary base in the United States, which is controlled by the Fed, we're talking about a growth rate over the last 2 weeks, annualized, of about 200%. The monetary base is at an all-time high. So the Fed is pushing massive amount of liquidity into the system. You don't really know where the liquidity will end up. But what it does, it fuels the prices of risky assets, of stocks, of commodities, and so on. And we think, therefore, if the Fed is not stepping back from its expansionary monetary policy, we still think that risky assets should be bought here. We are buyers on any pullback in equities in the US, maybe not so much in Europe, but it's definitely in the US.
And are you still a buyer of, say, the dollar? Because the last time we were here, I think it was back in December, you actually predicted that the dollar would bounce back. It was grossly oversold at that point. So here we are, up about 7%. Is this a trend to hold on to?
Yes, absolutely. I mean, it's the currency of choice. Some people have called it the currency of no choice. If you look at the alternatives, the euro, Swiss franc, the European currencies, there's a lot of pressure on them for obvious reasons. The only other alternatives would be the Aussie dollar and the Canadian dollar, which are backed by commodities. But yes, we are bullish on the US dollar for now, and we are still buying it.
Okay, you're right. What other alternatives do you have? So what about gold? Because you were predicting gold would go higher from here, but it's pretty much gone nowhere since the end of December. So how much should one holds gold in their portfolio?
Well, what we're seeing globally is massive currency debasement. I think that's something we've spoken before. And the gold price should be much higher. We actually are very bullish on gold in the long term, but given the dollar strength, we think that the gold price will be trading in a sideways pattern, maybe pull back closer to 1,000 once more, where of course would be a great buying opportunity. But the long-term trend is extremely bullish given the amount of currency debasement that is going on.